In line with the Malaysian government intention of levelling the playing field between local and foreign suppliers, it was announced during the 2019 budget that with effect from 1st January 2020, Malaysia will be imposing a service tax on digital services that are imported by consumers in Malaysia under a business to consumer regime. This is also an avenue for Malaysian government to impose tax on the digital economy, following the heels of other countries such as France, the United States, and the United Kingdom, who has already implemented the digital service tax. There are three main aspects in the bill for the digital service tax. Firstly, the digital service. So any service that is delivered or subscribed over the internet or any other electronic network which cannot be obtained without the use of information technology, and the delivery of the service is essentially automated. The second aspect is the foreign service provider. So any person who is located outside Malaysia and provides any digital service to a consumer, including any person who operates on an online platform for the buying and selling of goods or for providing services, and who makes transaction for the provisions of digital service on behalf of another person. And the last aspect is consumer. Now, who are the consumers? So a consumer is basically any person who meets any two of the following conditions. Firstly, who makes payment for digital service using a credit or a debit card provided by any financial institution in Malaysia. Second, who acquires digital services using an internet protocol address registered in Malaysia or any international mobile phone country code assigned in Malaysia. And lastly, who resides in Malaysia. So whoever meets these two conditions will be regarded as a consumer.
There are two types of taxes, direct tax and also indirect tax. Direct tax is basically a tax that is paid by an individual to an imposing entity. Examples are corporate tax and also income tax. Next, indirect tax is actually a tax that is collected by one entity in the supply chain, usually like a producer or a retailer, and it's paid to the government, but it is passed on to the consumer as a purchase price of a good or a service. Examples of indirect tax are the sales and services tax. Before this, Malaysia implemented the goods and services tax, but have now been replaced with SST, which is sales and services tax, and will be imposing digital services tax on the 1st of January 2020. What is BEPS? BEPS actually stands for base erosion and profit shifting, that refers to tax planning strategies used by multinational enterprises that exploit gaps and mismatches in tax rules to avoid paying tax. So as we all know, the world has significantly changed over the past decades as a result of digital transformation. And this obviously has a wide range of tax implications, cutting across direct and indirect taxation, impacting the tax policy and tax administration alike. So one of the biggest implications that has been at the center of the global debate is whether or not the international income tax rules continue to fit for purpose in a modern global economy. One aspect of this debate relates to how taxing rights on income generated from cross-border activities should be allocated among countries. So what are they doing to solve this issue? The timeline in the G20 is to develop a consensus-based solution by the end of 2020. But after the delivery of the interim report in March 2018, the inclusive framework continued its work and delivered a policy note in January 2019 that includes concrete proposals by the members who framed within two complementary pillars. So the first pillar talks about the reallocation of profit and revised nexus rules. So this pillar will actually explore potential solutions for determining whether tax should be paid on what basis, as well as what portion of profits could or should be taxed in the jurisdictions where clients or users are allocated. Basically, it's a profit allocation. So Pillar 2 talks about global anti-base erosion mechanism, and this pillar will explore the design of a system to ensure that multinational enterprises in the digital economy and beyond pay a minimum level of tax. What are the results so far? So the results of these efforts are actually showed in the program of work to develop a consensus solution to the tax challenges arising from the digitalization of the economy, adopted in May 2019. And it contains a plan to explore the technical design and implementation issues that must be worked out to develop a comprehensive and consensus-based solution within the agreed 2020 timeframe.
Okay, so why should our government impose this digital tax? Okay, first thing first, let's talk about our lifestyle. We live in digital age. Okay, almost every company around us provide digital services, from retailing to entertainment, like Lazada, Alibaba, and Netflix. I bet almost all of you have bought something online. Well, same, because I myself have bought something from Lazada, and even I also subscribe to Netflix and Spotify for in monthly basis. Okay, so what I'm trying to say here is that this industry is a billion ringgit industry with millions of consumers like me or you or everyone else. Well, Malaysia e-commerce industry itself has generated like 398 billion ringgit last year. Okay, so just imagine, what if our government tap into this segment? The government could rake up almost 2.4 billion ringgit of income revenue, tax revenue, that's what I'm saying. Okay, so this money will be channeled into our own infrastructure, our Malaysian infrastructure and development. So, well, rich country, happy people, I guess. Okay, so as mentioned by my friend before this tax will be only imposed on foreign digital service provider. So you see, before this tax, this giant company, foreign company, without physical presence here, freely gain their profit from our own people. So do you think it is fair for our local company to compete with them? Because you know, our local company, they all imposed with tax, charged with tax from the government, SST, GST, just name it. So do you think that it is fair? I don't think so. So when the government imposed this digital service tax, this will going to help the competition, help to boost our local industry. In Asia, we already have Japan, South Korea, and Bangladesh, to name a few. They already implement this tax system. So we are not the first or the last country to implement this. In fact, we model our digital tax system based on Singapore. Okay, we charge 6%, whereas Singapore they charge 7%. So our tax rate is one of the lowest, not in just Asia but in the whole world. So I guess it's pretty much a good thing. Well, we need to see how it's going. So I believe that our country won't be the last one, and almost every country will follow our step as we move forward into 4th Industrial Revolution.
So now, I'll be talking about the benefits of digital taxation. Firstly, of course, it will increase the tax revenue for each countries who implemented it. Secondly, we know that nowadays there are many businesses through digital platform. So this is the best chance for government to raise income by charge them with tax. How about Malaysia? It is actually will also benefit Malaysia if Malaysia implement this digital taxation. Firstly, our tax revenue will increase. It is expected that there are 2.4 billion increment in tax revenue every year. And this increment will also benefit to all the residents. Why? Because with the revenue, government will improve the infrastructure. For example, like public transportation for all Malaysia.
The benefits of digital taxation and drawbacks. I think the best part is that more revenue for the government means more money for local infrastructures, and better infrastructure then will of course lead to say better quality living for the ones in the rakyat. But in addition to that, who knows, this amount of money can be used for more investment investments in, for example, efforts that would attract better investments from overseas. Right? I mean, I don't think people want to come back to Malaysia to see that everything is like still worn down and all this stuff. So,
Secondly, before this, it's about fairness actually. Before this, foreigner company will never be charged with their business in terms of digital platform. But Malaysia local business, they are charged with a lot of tax like SST and also income tax. For example, Netflix, there are many subscribers in Malaysia and they make a lot of profit without being charged by Malaysian government. How about iFlix, who originally from Malaysia? They are actually being taxed by SST and also income tax. So, by implementing digital taxation, Netflix also will be charged with tax. So here, at the same time, digital taxation will help local business to be able to compete with all those big companies like Netflix, Spotify, and so on. So here we can see that there are some benefits that Malaysia can gain through digital taxation. That's all.
So, when we talk about implementing a new law in a country, of course, it will give a huge impact to the country itself. So, question rise: what is the impact of the digital taxation, of implementing the digital taxation to Malaysia, especially in business? So, when we talk about impact, there will be a negative impact and positive impact. So, let's talk about the negative impact of digital taxation. So, as you can see, when a new tax is being implemented, of course, the cost for the foreign service provider will be increased. So, when the cost increase, of course, the foreign service provider will increase their fee for the service that they provide. Then, when the fee is increased, of course, the demand for the service itself will also decrease, making, for example, Netflix and Spotify. So they will lose a lot of customers, as the customers will find another service provider that offer the service at lower price. So that is one of the impact of digital taxation. Also, the digital taxation itself will burden the residents. So let's look at the video of our interview with the taxpayer to hear about their opinion about digital taxation. That's what.
If somebody can clarify why this tax is in place for SST, GST, pretty straightforward. Although I can choose not to agree or disagree, but it is pretty straightforward. But for something which is digital and it's a subscription based, I need to know why. I mean, I'm not saying yes or no, but probably the MCMC or whomever is in charge of this can come up and explain to the consumers why is that 6%. Okay, this 6% is going back to IRB or going back to the service provider. That I need to ask.
My overall opinion is because globally, all the country actually is in their
Starting to implement.
They are actually, there's a tax on all these type of services already. So for us in Malaysia, of course, it's maybe for consumer we will find a burden, but for the country, for the government, there is the yes, there's a great revenue for them.
So that is the opinion of the taxpayer. So let's look at the positive impact of digital taxation. So digital taxation will give a chance to the local service provider to compete with the foreign service provider itself. So it will make it fair to both local and foreign service provider, as before this, foreign service provider, they are not being charged to tax. So because of this, there is no fairness in market itself. So before this, only local service provider is being taxed. So that's all for the impact of digital taxation.
Next is the challenges of implementing digital tax here in Malaysia. So our first challenge would be source-based taxation. Some jurisdictions would like to impose source-based taxation on certain digital service or products, even when the company has no physical appearance here in Malaysia. Some new digital services and products may not be fully captured under the existing rules, or it's unclear how to classify them. Certain services may be classified as business profits, royalties, or even provisions for the technical service. Next challenge would be turnover taxes. In addition to adjustments to local income tax frameworks, some countries also introduce new measures in the field of turnover taxes to tackle the tax issues associated with digital service development. The supplier of these services should register with the tax authorities and is responsible for fulfilling compliance requirements. Customers may become liable to the advertisement tax if they cannot provide authorities with declaration with the supplier. And lastly would be permanent establishment. Some countries adjusted their traditional PE definition to capture new business carried out for their jurisdiction tax. While certain digital activities are not captured by the traditional PE threshold, these may now be captured under some extended PE rules. Consequently, such digital activities may rise to local taxable presence.
So, what can we conclude from today's topic is that Digital Service Tax (DST), which will be implemented on next year, January 2020, is that although it is a burden to taxpayer, which they question why they still need to pay tax although there is already SSD, and why is it 6%? Why not 3%? Why not 4%? However, if the government fully utilize the tax revenue that they gain from DST, it will benefit to all of the residents, to all of the citizens, which we will gain the benefits through infrastructure and also welfare. So that's all from us. Thank you.